Story forward about Adani Tower and Tata Power. A 7-year battle that was waged by these companies seeking compensatory tariff has come to naught because the Supreme Court has struck down the order of the appellate tribunal for electricity that allowed these companies to be compensated on grounds that a change in Indonesia's laws on coal export prices were outside the control of these companies. CNBC TV 18's Anisha Jain and Ashmit Kumar take stock of the courtroom drama and what it really means for these companies.
The Supreme Court has sent a shock wave through the Indian power sector, and Tata Power and Adani Power have borne the brunt of it. In a move widely unexpected by power sector experts and industry watchers, the Apex Court has held that changes to a law in another country cannot void or negate commercial contracts within India. Simply put, Adani Power and Tata Power cannot change the rates at which they sell power or claim compensation because unforeseen circumstances threw their math out of whack. Here's what happened.
On 23rd of September 2010, the Indonesian Minister for Energy and Mineral Resources sitting in Jakarta had passed a seemingly innocuous Regulation Number 17. That one single regulation led to soaring of Indonesian coal prices, and the pain was felt directly by Tata and Adani Power. What followed was a demand by both these companies seeking a compensatory tariff to offset for the effects of Regulation Number 17. But after a 7-year-long tussle, the Apex Court has slammed the door shut on the demand for compensatory tariff.
Tata Power with a 4,000 megawatt plant and Adani Power with its 4,620 megawatt plant scurried to the central electricity regulator. They argued that Indonesian coal was the bedrock of their bids to supply power. And because Indonesia had changed its laws, their tenders to supply power were no longer financially viable. So they asked that they be allowed to revise their power tariffs higher. In 2013, CERC acknowledged this argument, and by February 2014, it said Tata Power could hike tariffs by 53 paise per unit, and Adani Power could effect a hike of 41 paise per unit. The problem was that this higher tariff would have to be borne by state power distributors, and these discoms appealed the CERC order. 4 rounds of intense litigation followed, with the matter moving from the CERC to the APTEL, then on to the Supreme Court before coming back to the APTEL and then all the way back to the CERC. Finally, in December 2016, the CERC once again held that changes to Indonesian law had wiped away the premise on which power production bids were formulated, and thus it allowed compensatory tariffs. A little over 4 months later, in response to a case filed by state discoms and NGOs, this order has been struck down by the Supreme Court.
In a bid tariff also, they were seeking to make it a cost plus tariff, which would have made a mockery of the bidding process altogether. When a person bids, he bids with eyes open, and in this case, you see, these people had their own coal mines, so they knew at what price they would be getting their coal, etc., etc.
The order has rattled the street. The Adani Power stock tumbled 16%, with experts pointing out that the company has already booked total compensatory tariff worth a whopping 9,000 crore rupees. That's more than the company's net worth. In addition, Adani Power has been reporting losses for the past 6 years, and analysts had been factoring in a favorable outcome to the case for the company to pull off a turnaround. The Tata Power stock, meanwhile, fell 2%, not because the company has booked any compensatory tariff, but because the losses at its Mundra plant have eroded over 4,000 crore rupees of the company's net worth over the last few years. Experts say that between the two, Tata Power is in a slightly better position because it did not show compensatory tariff on its P&L. For now, both companies are in the process of studying the order and will take a call on just how to proceed in some time over the next few days. Bureau Report, CNBC TV 18.